What's up, crypto family? Welcome back to Crypto Deep Dive. This is your host, Mehdi Farouk, Senior Investment Analyst at Token Metrics. My promise for you guys today is that I'm going to be covering Terra Luna. So the way I kind of do my deep dive, the main takeaway for you should not be the price prediction or the valuation of these projects I cover, is the way I kind of think about these projects, as well as different aspects and technical specifications I look for in these projects. So you can go on and do your own research and apply the similar techniques that I do on this project, which is Terra Luna, but on other projects as well. So my philosophy over here is to basically give you guys wisdoms, tools to carry your own research and think about the projects. Now, even though Terra Luna might not be a 10x opportunity, but I feel like this is one of the projects that sets up a good base for you to understand layer one stable coins and also help you, if there is a bear market, develop a higher conviction when you basically buy these projects at attractive prices. So if you watch this video now, if you learn about this project now, when the bear market comes in and you have attractive price points, you can use your information, learning, wisdom, and techniques that you learn from this video to go on and basically make better decisions. So without further ado, let's just jump right into it then. All right. So Terra Luna, how does it work? So at least in crypto at the moment, we have few things going on. We have a fiat collateralized stablecoin. So for example, in case of USDC and USDT, these stablecoins are backed by US dollar reserves. Now there's a problem with this. The problem is if Fed, central bank in the US, changes interest rate, and since these stablecoins are a big part of different layer one ecosystems such as Ethereum, the change in the interest rate of those of central banks impacts the ecosystem within Ethereum, since these stablecoins are frequently used for collateral and for other purposes in DeFi. So this is not a situation we want in. We want an economy or ecosystem in crypto which is kind of decentralized and also does not get impacted by the monetary policy of external world, in this case, Fed. For that matter, we have crypto collateralized stablecoin such as DAI. So DAI is backed by Ethereum. But now the irony of the situation is, and the paradox of the situation is, if Ethereum has a lot of fiat-based collateralized stablecoins such as USDT and USDC and even Binance USD in wrapped form, then Ethereum is still not isolated with regards to different monetary policy shocks. So Ethereum is still being impacted by those external factors, and hence one can argue that DAI is actually not true representation of a stable coin, because if Ethereum becomes volatile because of all the external influences, then DAI will also become volatile. So this is also not a appropriate solution, at least in my books. Then we have a final type of a stablecoin called algorithmic stablecoin. Now these stablecoins are very interesting. The reason why they're interesting is that these stablecoins are not backed by collateral. They're backed and they're pegged by algorithms. So in case of UST, US Terra, for example, it is basically, although pegged to dollar one by one, but they have backing of the Terra ecosystem. And the way the whole design and the mechanism of the stablecoin is designed is that since you have a Terra ecosystem sitting on top of US Terra, the price and the market cap of US Terra should basically capture what's happening in that ecosystem, what's happening in that economy. So another way of kind of thinking about it in slightly more complicated way is that you can think of US Terra as present value of all the future fees generated by Terra ecosystem. And in order to do that, what they've done is they have introduced another coin called Luna. So let's say if you have one by one peg with, let's say, UST and UST and USD, US dollar. Now, if UST increases more than that one by one peg, let's say it increases to 1.1 because the demand for UST is higher, then more Luna, basically more UST is minted. And the way it's minted is by burning some of the Luna, and once some of those Luna is burned, you can mint more UST, and this mechanism kind of stabilizes the price of UST and maintains that one by one peg. Now, if the peg breaks instead of upside and it breaks down, let's say 1 UST is equal to, let's say, 0.9 UST, $1 is equal to 0.9 UST, then basically more Luna is minted to kind of buy back UST and kind of stabilize this peg. So I hope you guys get the appreciation of how this system works and how this dual token kind of absorbs pressure between each other in order to maintain the peg. So this is how Terra Luna works. Now it comes under no surprise if you look at this chart. Recently, US Terra has flipped DAI as fourth largest stablecoin. See this chart over here? UST, US Terra over here now incorporates a very high percentage of the total stablecoin market base. If you saw my video, if you haven't, if you saw my video of 2022 prediction, one of my prediction is that I feel UST can become the second largest stablecoin within the crypto industry. So if it does that, I think it can capture $50 to $60 million worth of TVL at least for US Terra. So something very interesting, something to be mindful of. Now over here, as I kind of showed and kind of said earlier, that UST demand and supply is basically maintained by how the economy of Terra ecosystem works. So the main three pillar at the moment is Mirror, Anchor, and Chai. So what they're trying to do is they're trying to mimic how US economy actually works. So the reason why US dollar is very valuable is because it has a backing of US economy, which is very vibrant. So in order to mimic the economy, they're basically targeting three main structures. One is investment, saving, and payments. So if you have those three pillars within an economy, your economy will flourish and you will have demand for UST. So in case of Mirror, you can imagine it as the investment platform. Now, this is very interesting, especially somebody who does not live in US. I find Mirror protocol to be very interesting and amazing. So, for example, these days the equities are taking a hit. And being in Pakistan, for example, I cannot invest in US equity, or let's say somebody in Bangladesh cannot invest in US equity because of all the regulation. But they can basically get exposure of the price action of US equity by synthetic investments. So Mirror protocol provides that. So let me take you to Mirror protocol and kind of show it to you. So if you can see over here, you have different equities. You have Apple, you have Airbnb, you have Amazon, you also have Chinese stock like Baba, and you can get price exposure of these assets. And not only these assets, you can also get exposure to different ETFs. ARK is one of the innovative ETFs that I personally like. I think it's at a good price point, by the way. So let's say if I want to buy that, I can use Mirror protocol to buy it, and I'll buy it in UST. Not only that, I can also kind of get exposure to different crypto assets and different other synthetic assets. So this is the investment part of the Terra ecosystem. Now let's talk about the money market. So in US economy, you have bonds, you have money markets where you can park away your money as like risk-free rate. So in case of Terra ecosystem, you have Anchor protocol where you can earn 19% interest on your stablecoin UST. So those are the two investment and the saving bits of the Terra ecosystem. Then you also have Chai. That app basically allows you to make payments of all the goods and services you use in off-chain economy. So if you accumulate all of these three things, the demand for UST increases over time. And since the demand increases, in order to maintain the peg one by one, Luna gets burned. So that's how the monetary system within the Terra ecosystem works and supports the UST. And hence it comes under no surprise if you see this chart and follow this chart, as the UST grew in terms of the market cap, the Luna price also increased following that price action. Now, the reason why this is happening is because as the UST grows, more Luna gets burned. Another interesting element to kind of see from this chart is that UST is the only stable that has only algorithmic stablecoin that has maintained its peg really well. So if you compare it to Frax, you can see Frax has been very volatile, but if you kind of see UST, it has been very stable apart from few jitters here and there. And some of the other algorithmic stable coins have failed. And I'll come to this point in a second. The reason why these algorithmic stable coins fail is that they do not have any collateral or do not have any economy backing them. So hence, when there is a death spiral, which I'll mention later, these stable coins fail to act aggressively and basically fall down. I think one of the stable coins called Iron Titan or Titan, something along those lines, also failed, and it's shown over here. Mark Cuban basically got burned, and after that he basically got scared, and you won't see him again, kind of at least yield farming within DeFi, which I feel is kind of sad. So yeah, what is death spiral, right? So the death spiral comes with an algorithmic stablecoin, and it works something like this. So imagine at the current moment UST and Luna. So let's say when the demand for UST falls, more Luna is minted. More Luna is minted to basically purchase back UST. Think of it like this. So this basically, if more Luna is minted, price of Luna kind of falls. As price of Luna falls and more Luna comes into circulation, there could be a case that people might lose confidence that basically the Luna price is falling, the Luna economy is not doing well, and basically they might start selling the UST as well. And once they start selling UST, Luna falls further, and the cycle continues. Now, the reason why this might not happen is if Luna has a very vibrant ecosystem and economy, and then you also have validators who want to earn staking rewards in order to secure that economy, this death spiral basically goes away. So this is the reason why this death spiral haven't kicked in. So if you look at the whole ecosystem, a lot of different projects are building. So for example, in case of derivative play, you apart from Mirror, which I showed you, which is synthetic derivative play, you also have Livana, which is being built up. Very interesting. There are also other DeFi projects that are also kind of building up. One I think is called Astro Mars, which basically is entering into uncollateralized lending and borrowing. So if these kind of projects kind of build up, and you have an economy that backs up Luna, then there is incentive for stakers to basically buy Luna when the price falls in order to maintain the peg, because they want to secure this economy and earn interest on the activity of this economy. Another reason why UST has been very stable is that UST is now becoming the de facto stable coins of all the different L1s. So Terra community has been dedicating a lot of resources to build robust bridges. So Shuttle, Wormhole, IBC, Layer 0. So they're trying to build different bridges, and they want to basically use use UST in different ecosystem. When they use it and it gets adopted in different ecosystem, more Luna gets burned, Luna price goes higher. Another thing which is very interesting is that Cosmos does not have any of its own native stablecoins, and because of IBC, Terra blockchain can basically communicate with other blockchains within Cosmos, and I think they can export UST as a stablecoin for the whole Cosmos ecosystem. So this is another reason, and I feel like could be a catalyst for UST to do really well, and because of that, Luna will appreciate in price at least in the long run. Another interesting integration is of UST within Near ecosystem. So recently I saw the news. So Near also does not have its own native stablecoin. So UST has a good chance to basically enter and capture some of the network effects there. Then you also have products like Abracadabra, who have also embraced Terra. So UST can now be posted as collateral to mint Magic Internet Money on Ethereum. So for example, let me go over here and kind of show it to you. So you can deposit collateral and you can borrow MIM. The whole point is if UST gets broader adoption, more Luna gets burned, and so Luna as investment becomes more valuable. There was a governance proposition at Olympus DAO to integrate UST in the treasury as a reserve bond. Again, increases the market value of Luna. Then you also had UST liquidity mining incentive or different Solana dApps such as Saber and Mercurial. So I'm just going to give you an example of Saber. So over here you can deposit USDT. So all of these reasons will lead to higher adoption of UST and more Luna can burn. Now let's just talk about valuation. So in terms of valuation, Ethereum at the moment is the most expensive, around $400 billion. Solana around $90 billion, Luna around $60 billion, and AVAX around $35 billion. So Luna, you can argue, looks more expensive than AVAX, but it's cheaper than Solana and Ethereum. But if you look at the fully diluted valuation and compare it to how much value is locked within the Luna ecosystem because of DeFi activity, because of TerraFi, which is Terra's financial ecosystem being developed, and the UST being used as asset and other ecosystem, Luna appears to be the cheapest. So this is the metric you should kind of keep in mind. So both Luna appears cheap and AVAX also appears cheap, while Ethereum and Solana appear amongst the more expensive side of things. Now, one thing I would say is in terms of valuing the network effect. So what is the fully diluted valuation? And you divide it by Twitter following. Luna is slightly more expensive relative to Sol and Ethereum, and AVAX appears to be slightly higher in valuation when it comes to network effect. So that is the only downside I would say here. Now let's talk about my price prediction and at what price does it make sense to kind of accumulate Luna. I do feel like there is a possibility. So let me just quickly draw a trend line here for you guys. Yeah, so this is the kind of a trend line I'll be looking at for Luna. I feel like if you kind of buy around the trend channel support, I think, which is a $60 mark, I think it's a relatively good bet. But I think when the bear market heads up, I think you can perhaps see it might hit $40-50 mark, and between $40 is also a strong support, like strong historical support for Luna. The reason why I say that it can hit 40 is that if we enter a bear market, UST might come under pressure, and Luna will act as a stabilizer and will absorb the volatility of UST. So if that situation plays out, guys, then you might find an attractive entry point around $40. And apart from that, even if we don't enter bear market, I think there could be a lot of FUD regarding SEC basically trying to ban UST, at least in the US. And that can give us a good entry point around $40. So what happens if SEC kind of bans UST? It might get banned, at least in America. But apart from America, you also have a similar mechanism working in different currencies, let's say Indian rupees and Aussie dollars and other currencies as well. So the mechanism, the algorithmic part doesn't change, the protocol doesn't change. It might just get banned in one country. So that is one of the regulatory risks you have to keep in mind, and that is also one of the risks to our thesis. But I think if there is risk, there are always rewards, and I think the reward will be accumulation at $40 and waiting it for a few months to kind of see price appreciation to maybe $200-300. Because if you look at the growth of UST and adoption of UST in different layer ones, it's happening. Because of that, more Luna over the period of time will get put. So guys, I hope you enjoyed this video. My point of view over here is to give you balanced views and give you education. So when there is an opportunity to buy or perhaps even sell a coin, you at least have the tools, you at least have the education, and at least have something to work with. So thank you for watching this video. I hope to catch you next time.